All right, good evening, everyone. Futures Barizio here, 9:08 p.m. on Wednesday, March 12th, 2025. Hope everybody had a great day. And just jumping on in to do a quick live stream and recording for the channel. And as always, if you're just watching this on the pre-recorded after the live recorded on YouTube, make sure you smash that like button, subscribe to the channel, leave any questions, comments below. And the chat is open, so if you do happen to jump on the live stream, make sure you step in and say hi. So I just wanted to give you a quick update. I made a video about 2 nights ago on using um, currency indexes with Divergence to kind of have a different way to trade Forex. Okay. Now, again, a couple of quick things. First of all, these currency indexes are only open during the New York session, so from 8 a.m. to 5 p.m. New York time. Okay, so you cannot use these during the Asian session or the first half of the London session because they're not open until 8 a.m. So that's one, I guess, limitation of these. Okay, just from a time standpoint. So these are really meant to be used during the North American session, the New York session, which also, of course, includes, an overlap, with half of the London session too. So again, they're closed right now. You can see if I put my cursor at the very tip here of one of these, down at the bottom, you can see it says 1700 hours. That's 5 p.m. So they are closed. So the next time this starts to paint, it'll say 8 o'clock. So it'll be 8 a.m. tomorrow morning when it starts running again. Okay. So what I did here is instead of having them all on one chart, kind of all mashed together, where I had to, kind of really manipulate the chart to be able to see them, and it got very confusing. I just created two different templates, and I'm following 6 out of the 8 major currencies here. Okay, what you don't see on here is the British pound or the New Zealand dollar. And as I mentioned the other day, the euro and the British pound indexes move almost identical, so there's just no need. And I could always add it quick if I needed to. And the Australian dollar and the New Zealand dollar run almost identical. So I decided just to keep the Aussie up here because I think it's more heavily traded anyways than the New Zealand dollar. And so I end up with 2 sets of 6 here. So on this side I have the Canadian dollar, this is the Swiss yen, this is the Aussie yen. And over here you have the euro, the dollar, and the Japanese yen. Okay, and I probably need to change the color of this one or one of these top ones because we got the same color here. So why don't I just do that while we're talking? I'll make it some kind of red. Well, we already got like a red. What else we got here? Oh, let's pick some kind of green. There we go. Okay, so we just fix that while we're at it. Okay, so that's one thing. And so the other thing is you can use these on any time frame. However, I do find that for the most part, about the 15-minute chart works really well with this. But again, you can use this on any time frame. Okay, you need to have them all on the same time frame. Okay, so right now I've got this template. So basically what I have here is this trading view. I've set up 2 different templates. And so this one's set on the 15. So I do need to fix that right now and change this to change this one over here to the 15-minute chart. All right, and then we'll open this back up again. Okay, so now they're both on the 15-minute chart. And so what this does, having these separated like this, just allows me to have a better view because, like I said, when I had all 6 of them on one pane and I was having to use my mouse scroll to kind of adjust them so I could see them. And then the other thing is I tried to put them all on one screen so there would just be like one set of panes with six windows just stacked on top of each other. So basically instead of 3 here, I had all 6. But the problem is that crunched them down too much in order to fit them on the screen, and then I couldn't see the detail of these moves. So as a kind of compromise, I created two sets of three. This way here, I can still see them all, but I can still see enough detail. And, it's easy enough just to look left and right and, try to match up ones that are diverging. And so, like, here's a perfect example over on the right. And the other thing is, the nice thing here from a time standpoint, you can see when I move the crosshair, you can see it moves on the same time on both charts. So if I wanted to see, like, 8 o'clock in the morning on any of them, it's painting the same time down at the bottom. You can see right now it says 8:45 yesterday morning. And so it kind of syncs up, which is kind of nice. I think I could turn that feature off, but I actually like it like that. So if we look over here on the right with the euro and the DXY, and we look right here. So this was yesterday morning. This actually ended up being, I think, what did we have? CPI yesterday morning. So right here, you can see this big divergence where the euro shot up and the dollar shot down. So this would have been a great spot to trade the euro US dollar long. Okay. And so if we look at that, so that's yesterday morning at right around 8 o'clock. So if we go over here and we find the euro dollar pair, and I gotta rearrange all these. Okay. Euro dollar pair. Let's go to like a 15-minute chart. Yesterday, which was the 11th, 1500 hours on my chart is 8 a.m. on my broker. So that's right here. Okay, so this was right here, and you can see we had just come out of this pullback here, and then we went up. We went up about 40 pips. We did come back down, but we ended up going up again. So we did put in a 60 pip move here. Okay, so that's certainly a good move. Okay, so we go back over to the chart, to the indexes. Now, of course, you can use a shorter time frame if you want. You can go down to a 5-minute. You can use a higher time frame if you want. It just really, like anything else, it just depends on what your time horizon is. Do you want to hold these trades for a long time? Then you want to swing trade and use the 1 to 4 hour chart. If you want to day trade these, then use the 5-minute, 15-minute, and you can day trade and hold them just for one session or just for a couple of hours or whatever. And so again, guys, basically what I'm looking for, if we scroll back here, let's go back to like last week. So if we go over to here, so this was Friday the 28th, actually Monday, March 3rd. So this was last Monday. So let's go and find that on here. Yeah. Monday, May 3rd, 8 o'clock, right there. Okay. And so now we've got this view. So if we look over to the left on the left-hand chart, you can see at the open, all three of these currency pairs were trending up. So I would not trade any of these against each other. Okay. You can see you have the Canadian dollar, the Swiss yen, and the yellow is the Aussie dollar. You can see at this time when the market opened, all three of them were trading basically in the same direction. So I would not be looking to trade any combination of pairs on this one. Yeah, funny, Ethan. But if we look over here, all right, and we look at this one, we've got, all right, so here we have the euro and the dollar diverging, and also the Japanese yen. So you could have either traded euro dollar long or euro yen long, or maybe you could have taken US dollar. You compare the US dollar with one of the three on the other side. So you could take AUD, USD, or long, or you could take dollar Swiss short, or you could take the US CAD short, because you can see we have the dollar down and the Canadian dollar, which is the top left, diverging. So that's pretty much how you can use this. And so I just wanted to point out that this is a way that you can kind of modify these and Of course, you don't have to look at all six if you just wanted to concentrate on two or three. Obviously, you might not get a setup every day, but at least you know it would clean up your charts and make it easier to look at. The other thing I did, which is just a minor thing, instead of just using the regular line chart, I used what they call a step line. So if I open this, it's a step line chart instead of just the regular line chart. It's a very minor difference. If I change this to line chart, you'll see it, well, besides the color change, it just changes the way it looks. I like the step line because it actually shows essentially like a step pattern. So you can actually see these kind of right angle moves straight up like this, where it just shoots right up instead of kind of having more of a curve to it, which makes it a little bit harder to see that kind of that parabolic move. So this is just a step line. Again, it's another option of charting in TradingView. Doesn't really matter. You can use a regular line chart if you want. It's just a kind of a personal preference. But yeah, essentially, I'm just looking at these as being a nice way to kind of look for a nice divergent trade, and you can do this, pretty much every day. You'll find that right at the open between 8 and 8:30, unless it's a red envelope news day, you can probably find something right away, because as soon as New York opens, you're going to have the larger traders kind of setting up. Now, these could be false moves where it starts to shoot down like this and then turn and come back up. But you can see for the most part, when you have these parabolic moves, they do continue on for most of the session. Now, after a period of time, after maybe 1 to 2 hours, you might see the price start to go sideways like this, because for the most part, the large banks and institutions are coming in. They're doing their business, and they're either stepping out or just not really injecting more liquidity into the market. So you have these parabolic moves, and then most of this just turns into your retail traders later in the day. So if you're going to trade on these shorter time frames, you do have to prepare to potentially be out of those trades, and maybe as little as 2 hours. But like I said, sometimes much like if you have a big ship on the ocean, right? If it's cranking along and all of a sudden they turn off the power, the ship's going to keep moving in that direction for a while. So it's the same thing. You have the large banks come in, inject a bunch of liquidity, push a currency in a certain direction. And even though they might step out of the market, there's a lot of momentum keeping it going in that direction for probably that whole session, but at least for a few hours. And so, that's the way you have to look at it. But there's no guarantee. Obviously it could just reverse if it's something, news related. So just do be careful of the, any, trading into any high level news until things kind of shake out a little bit. All right. And so the other thing is, these straight lines down or up like this one and this one are better than these ones that kind of like stair step a little bit. These are showing me, less big momentum from the banks. So this Japanese yen one, where it kind of stair steps a little bit, it's okay. It's going up, but this is not a real strong impulsive move. This is probably more retail driven. Whereas when you see these straight lines up and down, especially when they are coming from an opposite direction of where price was, like right here, and all of a sudden it shoots up, those are, ones that are being driven by big money institutions. Okay. Like over here, just these real parabolic moves that go in one direction. Okay. And so just keep that in mind too. Again, there's nothing wrong with these stair stepping ones, but they're probably not going to be as good as something like this, where it shoots straight up. Okay. And don't try to like chase the market. If you miss one of these, then just let it go. I do find that later in the day, late morning, maybe early afternoon, you might get another push, another divergent trade on some pair later in the day. So for whatever reason, if it's position squaring for the day. So if you miss the, the early one, again, I do find that between like 8 a.m. and 10 a.m. is kind of the best time, best window to find something. But if you do miss grabbing something in there, then you certainly can look later on. Although again, once you get past 12 noon and London closes, the opportunities are definitely going to be more sporadic and probably not as long lived, because all that London liquidity drains out of the market, at noontime. So certainly the morning is better, but you can potentially look for these trades later in the day too, late morning, early afternoon. And it's very easy to go back and back test this. So, you know, but again, this is TradingView Premium. That's what I'm running on. And it's really the best way, I think, to set these up. So again, I like having them like this just because it makes it a little cleaner. It makes it easier to see these moves without me having to like manipulate the chart with all 6 lines drawn on one pane. And it makes it really confusing and difficult to find anything and separate the noise. So this is much cleaner. And so this is the way I'm going to use this moving forward. So, I just basically saved a master template on this, and, that's pretty much how I'm going to run with it. As far as time frame goes, I'll probably play around with 5-minute, 15-minute. Like I said, you can back test this on any time frame. Probably even the 1 hour chart would be fine. If you want to swing trade it, the 4 hour chart probably going to give you the same exact thing. So, in fact, if we exit out of this, and I'll move this one to the 4 hour chart. So on the right here, we're looking at the 4 hour chart. So all these are running on the 4 hour chart. So I'm not going to really pay too much attention to the time right now. I just want to look at the chart, and something like this. Again, this is market open, but you can still see these on the 4 hour chart, and you can see this continues well into the week, because this is Tuesday, and then as this goes, and then we have sideways moves basically Wednesday, Thursday, and then we shoot up again on Friday. So this is what I mean, where you can hold these. We've got sideways momentum and then another move up. So this is a good swing trade, right? So again, this would be the Euro USD long. All right, because we have both currencies moving divergently, the euro going up one day, kind of taking a pause for 2 days, then running up again. The dollar is just the opposite, down one day, running sideways for the next 2 days, and then down again. So it's a perfect divergent trade that you can execute on a 4 hour chart, and you can just hold this. And obviously you want to look at your actual Forex pair chart to, pick out key levels, maybe areas that you want to have take profit or stop loss areas. And you can't do that based on these, but this is just to help you filter out and find two currencies that are moving divergently. Because remember, when banks are trading this stuff, they're not really trading currency pairs. Like that's spot forex, like euro US dollar. That's a spot forex, and it's how the market is created. But, hedge funds and banks and large institutions, they're trading euros, they're trading US dollar, they're trading Japanese yen. And it's your broker in the market, it's the Forex spot market that creates these pairs. And that's how, basically they're moved. But the banks aren't so much trading currency pairs, which is why this is nice, because it gives you kind of an independent view of each currency and allows you to match up ones that are moving divergently. And like I said 2 days ago on the first video, basically, you want to find ideally two currencies that are diverging. So one's moving strongly in one direction, up, the other one's moving strongly down. That's where you're going to get the most momentum. Okay, or you want to, if you can't find anything like that, which you should be able to, but if you can't, the second way you can do it, which is not as good, but it still can be profitable, is to have one strong and one neutral. So one like trending up and the other one moving sideways, or vice versa, one trending down and the other one trading sideways. Okay, so if you have one up, one sideways, you're going to go long on the currency that's that of the one that's trading up, and vice versa. If the one that's down, you're going to short that pair with that currency that's trending down. Okay, and so that's alternate way to doing currencies that are diverging from each other. But obviously, the best way is to have one, very much going the opposite direction of the other one at the same time. And you will find that pretty often. So, so here's just looking, again, this is a 4 hour chart. And this was from last Monday. So again, I wanted to show you one more swing trade, how you can do this that way too. So if you will look here, we have the US, again, the euro and the US dollar in the orange. And look what happened. This was last Monday, okay? And we had the euro shoot up at the open. We had the dollar start trending down. It wasn't a real big move down, but it was. And you could go short, long on the euro dollar, and you'd still be in that trade even at the end of the day today. Because look at this. It just while there were little hesitations and pullbacks, the direction never changed. Okay, so you had this euro going straight up. You had the U.S. dollar going straight down. Okay, and this was basically more than this is like what, 8 days of price action from here to where it is to where it closed today, because it was last Monday through the end of the session today. So you have 8 trading days where you could have just held this thing. So, and it was all started by this parabolic move up. Okay, now you're not always going to be right, and you're not, again, this is not a foolproof system. Nothing is. So you're not always going to be right, and you're going to have to be prepared sometimes to, to exit a position. So here's an example right here, but this still is not an awful trade. We have the euro, in this case, the euro going down instead of this parabolic move down, and the US dollar moving up. So in this case, you would have shorted the euro dollar, and this went on for, see, so this was Thursday, and then this went on until the end of the day Friday. So basically you had 2 trading days right here. Okay, so you had 2 days you could have held this trade, and so that's not bad. I mean, for that's still a swing trade. It's a short swing trade, but it's a swing trade nonetheless. And then eventually we had this, we had this big move, and this is where, of course, you're going to look at your actual chart, and you would have seen this turn coming right here for this big move up. All right. So again, you're not just looking at this blindly. You still need to, once you place your trades, you still need to go over to the spot chart and look at what price is doing and look at price structure, and you probably would have known that this big turn right here was coming. Okay, but either way, even if you took this, you still had 2 days of profit. So if we go and look at this, so that, again, this was Thursday the 27th. All right, so let's go to the euro, and we'll go to the 4-hour chart, and we'll look at Thursday the 27th. What time was that? It was 8 a.m. So basically through the end of the day. So euro 27th was right here, and that would have been, yeah, that would have been right here. And you can see right here, so here was that move down. I said euro dollar down, so the move started right here. Okay, so even, and this went on for basically 2 days. So even if you caught this whole move, that's 130 pips over 2 days. I mean, that's a good move. And then of course here was that move where it shot up and went back the LOA. But even this trade right here, this is a 4-hour chart. This is a nice trade. I mean, if we mark this off and we go to a shorter time frame and look at it, here it is right here, okay, on the 1-hour chart. You can see this is a nice move down, and you certainly could have taken this perfectly valid trade, 130 pips. Now then it did shoot up, and I think this was on news. This was NFP last Friday, and that's what caused this to jump. So like I said, when you're heading into those red letter news days, you just have to be cautious to either close your trade before that news comes out, or just be prepared to exit, because this was NFP, which caused this jump, and then for the euro dollar to turn long. So just be wary of your news calendar and make sure you know what's coming out, and either get out if you're in a profitable position, or in a losing position. You might want to just consider closing it before the news comes out, and that's it. All right, so I'm just showing you that you can do this on any time frame, and it will work. Okay, most of the time. Again, nothing's perfect. You are going to take losses, but if the two things: don't chase the market and wait for these parabolic moves to set up, and you want them lined up at the same time between at least two currencies diverging in opposite directions. At that point, you can go ahead, take the trade, put your stop below or above the swing, and then just leave it alone and see what happens. And if you're on a short time frame, 15-minute, 5-minute, whatever, just be prepared to exit the trade that day. But if you're taking it on a 1 hour, 4-hour chart, probably okay to hold it for a while, because if it does set up that way, it's probably going to run in that direction for at least a couple of days, as we just saw, and maybe for like we saw over here, where this ran for 8 days, and still technically it's still running. So anyways, I just want to point that out. Um, I did look at this on futures to look at cash futures. Now, obviously, futures are not traded in pairs. It's just, you trade oil, you trade gold, you trade whatever. And I do look at the CFD charts, the cash charts of futures, and I did try to use this to trade that. Doesn't really work, so I would not advise doing this in futures, but it does work really well in Forex because these are traded in pairs. So, all right, so I'm going to leave it there. As far as trading today, I actually didn't take a lot of Forex trades. Actually, I only took one for a small profit because honestly, I was just back testing this today, and I just didn't want to get caught up taking a bunch of trades just to back test. I was just letting the market run and just seeing how it was going. I did close out my oil trade. I was in an oil short last night. If you go back and watch yesterday's video, and that actually hit take profit early this morning, and then I was out of that. So I do have a copper long still running. I'm just going to let that run through the night, and that's all I did today. So anyway, so I'll leave it there. Again, any questions, comments, leave them down below. Make sure you like the video and subscribe to the channel, and hope you enjoyed it, and hope it makes sense. And again, in order to set it up like this, you do need to have TradingView, so I will kind of put that disclaimer out there. I don't have any kind of affiliation with TradingView. I'm not going to, post an affiliate link or anything. I don't have anything like that, but this is the way you kind of have to do it. And sometimes, and I don't know if you can do this, like I mentioned, with the free TradingView, because I don't know if they'll let you have this many panes, but you can try it if you have it. But if not, then if there's something you want to do, then you may have to invest in a paid version of TradingView in order to be able to set this up. But if you have any questions on how to do that, just let me know, or you can watch the video I made on this a couple of days ago when I kind of set up the whole premise and talking about these different indexes. All right, so have a good night.